So thank you for joining us on this morning of cooling day for our DBS SESAMi webinar, The Road to Recovery. So my name is Clement. I'm from SESAMi, and we have Noel, who was just speaking earlier, he's from DBS, who will be co-hosting this event together with me. So to set the context of this webinar, uh, given the sudden outbreak of the COVID-19 virus, I think all of us have personally experienced the kind of significant impact that the pandemic has had on the Singapore economy, businesses, as well as even in our personal life. So we wanted to organize this webinar just to touch on some of the hot issues that businesses have been experiencing. For example, how do they get access to financing? When and how should they be digitalizing their businesses to adapt to the current times? And we also wanted to highlight what are the current financial schemes that are out there that businesses can tap onto to quickly get back on their feet so that they can get back to their pre-COVID highs as soon as possible. So without further ado, let's have Noel to introduce our esteemed speakers. Noel?
All right. Hi. So first up, we have King Leong. Maybe next slide, please. We have King Leong, who has been one of the pioneers of factoring, being originally from DBS for over 30 years before moving to FCI as a regional director, and currently is the Asia Pacific representative at Landscape, which kind of provides the cutting edge technology solutions for a range of financial products. Now, of course, next up, we have Lin, who is a senior vice president in GTS SME Trade in DBS. So having over 13 years of experience working with SME, Lin is currently leading a team to develop and commercialize propositions on documentary and open account trade for the SME segment in her region. And last but definitely not the least, we have Chin, who is the managing director of SESAMi, where he is the key man driving operations at the business and is currently spearheading the latest PEPO initiatives across SG. So as you can see, they'll be covering a range of topics. And yes, we'll be starting very soon. So King Leong, let's start off with you with your topic on demystifying receivables. King Leong, please.
Can I have the slide, please? Okay, good morning, everyone. First, I would like to thank DBS and SESAMi for inviting me to this webinar. My topic today is demystifying receivable. SME growing stronger after the pandemic through your receivables. Next slide, please. As mentioned earlier, I have about 30 years of experience in doing receivable financing. And during these past 30 years, I have experienced three major financial crises, excluding the current one. There is the 1997 Asian financial crisis, the SARS outbreak, and the 2008 global financial crisis. During this financial crisis, SME will always have in mind whether they will survive beyond the crisis. But from my experience, many of the SME grew stronger after the economic crisis. Next slide, please. In all these crises, the Singapore government has provided assistance to help SME weather through the crisis. The assistance include availability of finance, such as the various schemes under the Enterprise Finance Scheme, low interest rate to reduce the burden of interest for the SME. As you know, the MES has introduced or has provided interest rate of 0.1% per annum. And there's also an increase in government risk sharing so as to encourage the banks and the financial institutions to provide financing to the SME. All these government schemes are given via the PFI or the participating financial institution. Next slide, please. Here are the Enterprise Finance Scheme and the credit insurance. In the Enterprise Finance Scheme, there is the SME working capital. This finances the daily operational cash flow of the SME. There's also the trade loans. The trade loans would include letters of credit, trust receipts, and it also includes receivable financing and factoring. The loan insurance scheme. In view of the pandemic, Many of the lenders are worried of the credit standing of the borrower. To help them to get financing, the government also have this loan insurance scheme where they will guarantee your credit standing so that the lenders will be more prepared to grant financing to you. You have to pay the premium, but the government have subsidized 80% of the premium. In view of the current pandemic, many of the overseas buyers and the local buyers may not be in good shape, and hence you may not be prepared to sell them, or the banks are not prepared to finance against such receivables. The government have also provided the trade credit insurance scheme to underwrite these overseas buyer and local buyers so that you are confident in selling to them and you can do more business. To help you, the government has provided a subsidies of 50% of the premium which will be paid by the government. And many of these schemes, you can find it in the website as shown below. Next slide, please. Whilst the government has provided all these assistance schemes, the SME need to grow beyond post-COVID. The question in your mind is that, can you continue to depend on the government scheme? No, you have to look at your own ability to get financing so that you can grow stronger. Next slide, please. However, there's a problem in getting financing beyond the government scheme because most of the financing would require collateral. Many of you are unable to provide the collateral, and even if you can provide the collateral, there could be a fall in the security value and you will not be able to get financing. Some of you may be prompted to use your personal property to get financing because over the years you may have paid down the loan, but don't do it. Leave the property for your spouses and your children. There is another asset in your company which you can get financing. Next slide. There's one asset that you have and is commonly overlooked by many SME. This asset has not fallen in value. In some cases, it can be as good as gold if you're selling to very good company. It forms about 50% of the total asset of most SME, and this asset will grow as and when your company grows. It will grow from strength to strength if you manage it well. On the other hand, if you do not manage well, you may get into cash flow problem because if your buyers were to delay in payment, or if they fail, then you may get into working capital problem. Next slide. Receivable financing help SME in Europe and China. Europe is the world's largest receivable financing market with 68% of the market share. China is the second with 13.7% market share. And in fact, in China, this industry is expected to grow further as the government has passed a law as a result of this pandemic to ban the anti-assignment of payment. As you know, many of you who have been using receivable financing will know that the buyer may not agree to the assignment of the receivables. Hence, you may not be able to get financing. However, in China, they have passed this law and the Chinese SME will be able to get financing. China was 20 years behind us in terms of receivable financing, but they have now surged ahead of us. According to the European Federation of Factoring and Commercial Finance, receivable financing is a growing industry and forms 11% of the EU GDP. It provides 640 billion funding to 64,000 businesses with an annual turnover of 1.7 trillion euro. It is used, like many of you, in the manufacturing, service, and the distribution industry. Contrary to the normal perception that receivable financing is risky, the loss given default ratio of receivable financing is low, which means that it is not risky, provided as again, you manage it properly. Otherwise, it can be very risky. Next slide. Next slide, please. So when used effectively, receivable financing will help SME to grow. I would like to here show an example. Next slide, please. Oh, here is an example of a production status data. Now, let's assume that the company has got a gross profit of 20,000, total cost 100,000. The production cycle is 30 days, credit cycle is 30 days, and total cash flow cycle is 60 days. You can't do anything to the production cycle, but you can do something to the cash flow cycle. And this can have very significant impact on the company. Next slide. So the company has got two options. Number one, wait for payment, and number two, encash it. Press enter, please. So if you wait for payment, the cash flow cycle will be 60 days. Press the button again. On the other hand, if you encash it, your cash flow cycle will be 30 days or reduced to 30 days. Let's look at the impact of these two options. Next slide, please. Under option one, where there is no financing, the cash flow cycle is 60 days. However, when you get receivable financing, your cash flow cycle is reduced to 30 days. The number of production unit you can do doubled to 12 unit instead of 6 unit. And your annual sales turnover increased to 1.2 million instead of 600,000. Next slide, please. So in terms of a financial impact, you can see the sales turnover increased to 6 million, and if a net margin is 10%, you get an additional profit of 600,000. And assuming your interest cost is 1.5% of sales, which is made up of service fee and interest charge, you will have a financing cost of 90,000 and an additional profit of 210,000. Instead of leaving your production capacity idle, you can use additional financing to use up your production's capacity and make additional profit. In this connection, I would like to give you a real-life example. There was this engineer who worked in a multinational company, and the company asked him to come up and do metal stamping. He managed to get equipment financing for the metal stamping, and he started to do metal stamping and produce invoices to the multinational company. However, the credit term is 30 days. The multinational company give him additional order. Now he has got a problem. How is he going to fund this additional order? Fortunately, he came to DBS. DBS was able to give him a receivable financing, which is against the receivable. He is able to take up this additional order, and from one shift, it moved into two shifts. There are more orders coming in from the multinational company. He used the receivable financing to fund this new order, and it goes into 3 shifts. Thereafter, with the profit made, he can buy more machine. And you know, this company was in the terrace factory in Tua Payoh Industrial Estate. You can still see this terrace factory there. From a small terrace factory, it managed to grow so big that it was ultimately listed in the stock exchange. Like many of the SME then, many of you could be the same and grew stronger after the pandemic by using receivable financing. Next slide, please. So post-COVID, many of you can grow from strength to strength. You should consider using receivable financing to grow your business. As mentioned earlier, receivable financing grows with sales. So the more you sell, the more financing you can get. This is different from many traditional financing where the financing is based on your credit standing and is static. But receivable financing will keep on growing. Talk to your bank to explore ways to use your receivable financing, receivable to grow your business. There are many alternatives available in the market, such as accounts receivable financing, account receivable purchase, invoice discounting, factoring, asset-based financing, supply chain financing. Now, supply chain financing is also known as reverse factoring. In factoring, the bank approach the supplier, that's you, and give you financing. In the supply chain financing or reverse factoring, the bank actually approach the big buyers, and the big buyers are prepared to do to help you to get financing from the bank. So it's called reverse factoring. With digitization, it is now easier and more convenient to get receivable financing. With that, I would like to end my presentation. Thank you.
Hey, thanks,
Next
King
slide.
Leong. Hey, thanks, King Leong, for sharing your insights and wisdom on receivables financing. I think this will be very useful, I think, for our audience in the webinar in just understanding this alternative means of getting financing. So just before we move on to the next speaker, I just wanted to draw our audience attention to the QR code at the top right-hand corner of the slide. So basically, if you have any questions that you would like to address to our panelist speakers, please scan the QR code to just post your questions there. So moving forward, let's have Lynn, who is from DBS, to share more about digital supply chain financing.
Hi, everyone. Can you hear me? Yeah, hi, everyone. Thank you for joining us today. My name is Lynn, and in my current role, I commercialize trade and OAT solutions for SME and DBS. I hope everyone is safe and doing well during these extraordinary times. SME like yourselves are the engine of Singapore's economy, and during this difficult time, we know that cash flow and efficiency are your top priorities. We know you have to grapple with many other challenges to keep your businesses going. Today, I would like to share with you the digital supplier finance solution that we have put together with the SESAMi team, and this is also a form of receivable financing. We hope to provide you with a financing solution which is enabled digitally, and that will be convenient and easy to use for you. The solution will help you achieve efficiency in your cash flow management and also save time and resources when you request for financing digitally. Slide, please. Next slide. So, quick recap. Typically, SMEs like yourself will sell locally and via open account terms. You will deliver your goods and provide services, and later on invoice your buyer, providing them with credit terms. When the credit terms end, you will then receive the repayment of your invoice from your buyer. And in this instance, your cash flow is trapped in the receivable that is pending payment from your buyer. Now, for this digital supplier finance solution that we have, after you have delivered the goods and provided the services, you will be receiving the requesting for financing via the SESAMi and Capital Match portal. So digitally, you'll find request for financing digitally, and no submission of invoices and supporting documents is required at this juncture. DBS will fund your receivables and make early payment to you while you plan for receipt of funds from your buyer. Next slide, please. So the key benefit of this solution, early payment and up to 100% invoice value. So as a supplier, you receive up to the full value of the invoice that you have billed your buyer. Secondly, no financial documents required. The assessment of funding is purely based on your transactions on the SESAMi platform. We do not require you to submit your financials. Next, you get to receive your funds within 1 working day from applying of funding. And funding cost is competitive. We don't have any separate transaction fees involved. We only be charging the funding fee, your cost of funding, which is a shade of 5% based on current prevailing interest rate. Lastly, it will be on a non-notified basis. There's no requirement to inform your buyer on the funding arrangements you have with us. Now, next slide, please. These are the next steps if you're interested in this program. You need to contact your SESAMi representative to sign up for the program, and we will be reviewing the application and providing a code later. If the application is approved, you receive a letter of offer from us, and with that, what you need to do is to open a DBS account, and the specific use of this account will be for receiving payment from your buyers. And you will need to notify your buyer to make payment into this DBS account. Next, when the facility is set up, you just, as I mentioned earlier, select the invoices that you want to finance via capital match. There's no requirement of submission of physical invoices and supporting documents at this juncture. So this saves a lot of time for you if you need to sort out the physical copies of financing, typically that you need to do so now. And we'll proceed to fund the invoices within 1 working day if everything is in order. And at due date, your buyer will just remit the payment directly to your account with DBS. Next slide, please. We have put together a special bundle for suppliers who are taking up the digital supplier financing solution. This is bundled with our digital business loan. You get to enjoy preferential rates for this loan. And the loan quantum is up to 200,000 if you don't need to submit your financial documents. There's a flexible repayment period of up to 5 years, and there's an option of interest servicing. So do note that for digital business loan, this is only eligible for businesses who are operating in Singapore with at least 30% local shareholding. Additional supporting documents may be required on a case-by-case basis. Next slide, please. Okay, so to recap, the benefits of this digital supplier financing solution to you will be convenience and easy application. You do not need financials, nor invoices and supporting documents when you apply for financing. You get to be more efficient in your cash flows. You have quick access to your receivables, which help you in your cash flow planning. You have the ability to raise funds when you need to do so it's flexible. And this emphasis is the strength of your relationship with your buyers and your transactions in the SESAMi platform instead of relying on your financials. And with this, I've come to the end of my sharing.
Okay, thanks, Lynn, for sharing about our DBS and SESAMi partnership. So I think since we have a bit of time to spare, we've actually gotten quite a bit of responses on our pigeonhole in terms of questions that our audience are asking. So maybe let me just pose some of those questions to you.
Okay.
Yeah. So I think one of the top few questions is from our audience is, if my business is not in need of cash, how can this solution benefit me?
Okay. So opting for this digital supplier financing will allow you to raise funds anytime you want to. So in case of emergency, you can leverage on your receivables, which is what Kim Leong said, like your goal at any point in time. And your surplus cash can be deployed for other emergency needs that your business will require at this juncture. And given COVID situation where we expect that it may last more than 1 year, this flexibility could be good for your business. Yep.
Yes, okay. Thanks for addressing that. Maybe let's have another question. I think this question has got about 4 upvotes from our audience. So this question is, how would you compare getting receivables financing from the banks versus alternative lenders? And how does this DBS SESAMi partnership fall? Where does it fall?
Okay, so there's actually 2 questions. So the first question, correct me if I'm wrong, Clement, is how do we compare ourselves with alternative lenders? I think when you borrow from a bank, we come with the full suite of products and solutions, be it cash management, FX, credit protection, and also your business protection, banker. So in a way, we have that advantage. And secondly, I think I've mentioned that our cost of funding could be also quite attractive. And lastly, we do have the convenience and ease of application when we come up with this solution. Okay, so Clement, the second part of the question was, I need you to repeat that.
Yeah. So I guess with like the kind of pros that banks can offer versus what alternative lenders can offer. So how does this DBS SESAMi partnership, how does it fall to address, I guess, any of the needs of suppliers?
So I think the partnership falls in a sweet spot where, we have worked with SESAMi to use your transaction data to come up with a solution, and then you get the benefits of working with both SESAMi, who can also be seen as in the alternative lending space, and DBS, which is a traditional lender who avails the full suite of banking products and services and expertise and advice to you. Yep.
I see. So in a sense, I guess like the whole DBS partnership is kind of like the best of both worlds, lah.
Yeah, you can say that.
Okay. Yeah, thanks for sharing, Lynn. Maybe let's move on to the next speaker. So for the next speaker in our lineup, we have Chin to share more about digitalization and the kind of opportunities out there for our SMEs and businesses in Singapore. Chin, please.
Hi, Clement. Are you
Hey,
able to
Chin.
hear me now?
Yep, all good.
All good. Okay. So let me start by reinforcing what the other speakers have said, right? So Mr. Lee talked about the ability to use your asset to finance. Lean from DBS talks about the partnership of SESAMi. What I wanted to do is explain some of the digitalization that when it takes place, it actually helps you to get financing, right? So let's get on with it. Next slide. Okay, so in these opportunities, there are 4 steps. Let me adjust the camera. There are 4 steps that can be taken. Number 1 is how do we adapt in the new COVID normal, right? New normal. How do we then transact on trusted platform? This is actually very important because if it's not a trusted platform, then is the data trustworthy, right? So trusted platform is very important. Second, now that you have done your transaction on trusted platform, let the intelligent marketplace help you discover business opportunities, right? New business opportunities in the ecosystem. And how do you then maintain all these benefits? It is to digitalize your business so that your data is accessible, your data is accurate, and your data can be used for financing. Next slide, please. Adapt. Now, I put here the new normal, isolation and work from home. In the new normal, be it COVID or maybe some other normal, some other situation, we cannot assume that we'll always be in the office. There will be times where we need to work from home. So now how do we adapt to this new scenario? Next slide, please. Trustworthy data, very important. Your data that you use must be trustworthy. So what does it mean? It needs to be traceable to source. If you're issuing a PO, you're getting an invoice. It's integrated server to server so that you are able to transact business seamlessly with your buyers, right? And connected directly to devices. You don't have to download someone and someone manipulate the Excel worksheet and then you only get the report. It needs to be connected directly so you get information real time and accurately. Next slide, please. Accessible data. The key point is you don't want to get into a situation where I'm in my house, I can't go to the office. I can't get my data, right? So data needs to be accessible. Next slide, please. How can SESAMi help you? All right, SESAMi is a trusted e-marketplace that helps you on the trusted platform. When you use SESAMi, information like your PO, your invoice can be integrated to your ERPs. This makes the digital safe and secure. And then SESAMi system is also browser-based, which means you can get it anywhere, right? Be it in your home or in the office or even when you're vacationing, right? If you want to work. Next slide, please. Transact, right? Transacted on the global platform. This is important. How do we do it? Next slide, please. Global platform. platform cannot be just one city or one country. It should be global. And this is where PEPO e-invoicing come in, right? PEPO has a four-corner model that allows you to transmit your invoices globally to other companies who have PEPO. All right, next slide, please. Trusted systems. Getting into PEPO requires a process, and SESAMi being one of the PEPO providers, actually verifying that your UEN is correct. It provides a system to trace your invoices. It also provides a secure digital exchange so that hacking and encryption, no, hacking will not happen. Encryption will help protect your data. Next slide, please. And this is how SESAMi does it. SESAMi is one of the few appointed PEPO access point provider. That means they have read through the credibility of SESAMi. PEPO is a four-corner global network model. You can send your invoice globally, and PEPO has all the encryption and security needed to send and receive invoice securely. So SESAMi delivers on all these three areas. Next slide, please. Discover. So you are able to adapt, right? And then you are able to translate on a trusted platform so your data is trustworthy. Now with this foundation, we should go ahead and see how can we use this information to discover new business opportunity in the marketplace. Next slide, please. So we have talked about importance of data accuracy. Using the SESAMi platform provides another layer of accurate and verified data. There's digital award and contract. The buyer will authorize the PO given to you, and when you give your invoice, it's actually a three-way match invoice. All these give the veracity and how the accuracy of data, and not just your invoicing. Your financial asset could be something like a contract, a purchase order, or an invoice, as you can see in the diagram on the right. Next slide, please. Intelligent marketplace. Other than giving the data platform that is very accurate, verify, SESAMi has got intelligent marketplace capabilities. It's an e-procurement platform. You'll be able to match you as an SME to opportunities that's being published by SESAMi's buyers every day. So, and with SESAMi as a secure platform, the invoice, the PO, the contract are actually possible candidates to use for financing. Next slide, please. Okay, how SESAMi delivers is a mature e-marketplace, is an intelligent marketplace, and data is always very accurate and verified. So that helps the financial institution when you are applying for your loan. Next slide, please. Digitalize. Now, how do we digitalize so that we keep the benefits? Next one, next slide. Single digital truth. All the supplier-buyer interactions are captured. Invoices for government can be captured. Reference is a reference for financial institution. That's the importance of a single digital truth. Next slide, please. Closed loop verification. All the information from your buyer will be verified by the buyer. The seller will need to accept changes made by the buyer. There's a common agreed material specification or tender specification, and there are digital change control workflows, all these that's captured, right? So the process is actually very robust, and that will give confidence to the financing organization. Next slide, please. Okay, so single digital truth, how does SESAMi deliver? You can use SESAMi PEPO e-invoicing solution. You can approach SESAMi and we can work out with DBS on the financing solutions, and you can join the SESAMi marketplace, be it a private marketplace or a public marketplace. Next slide, please. Overall, this is a summary of my slides that we presented today. The ability to adapt, you do that by using the SESAMi cloud platform. The ability to transact global systems and trusted systems, right? That is where the PEPO e-invoice solution is one. The other one is, of course, the secure private and public marketplaces. Discovery, how SESAMi can help you discover business opportunity. That's because in our private and public marketplace, there is an intelligent engine that always scans through all the RFPs, all the tenders that is available, and then connecting you to these tenders, right? And then finally, digitalize. not just SESAMi, to digitalize, you need to be able to connect back to your source systems, and that's where ERP systems, SESAMi has open interfaces to connect to the ERP systems. And last, finally, I put there Capital Match. Capital Match is a company of SESAMi and DBS. You can work together with us to get financing, perhaps using your invoices, perhaps using your purchase order, perhaps even looking at your contract. With that, I end. Thank you.
Hi, Chin. Thanks for sharing about the various schemes that's offered by SESAMi to help basically lenders and suppliers to digitalize their own platform. So maybe since we have a bit of time as well, there are a couple of questions that have been posted on the Pigeonhole, which are directed towards more of the PEPO program. So maybe let me just shoot a couple of questions to you and let me know what you think about them. So one of the top upvoter is asking, so how do we as suppliers stand to benefit from adopting PEPO?
One of the easy benefit that get from PEPO is number one is verified invoice, especially if your invoice is accepted by the buyer. Right. The other benefit of PEPO is that with that verified information and invoice, you can work out on financing so that your cash flow gets better. So this is one of the very direct benefit of using PEPO because it's a verified invoice.
Yes, that sounds good. Maybe just another question, last one before we move ahead to our panelist discussion. So I think one question is PEPO widely used by suppliers currently?
The momentum for PEPO, right, is actually quite good, right? PEPO started somewhere end of January in Singapore, and for now, Singapore has got about 15,000 registered SMEs using it already, and we foresee this number to kick up to about perhaps 100,000 by the end of the year, especially because of the government grant to adopt PEPOs and e-invoicing. Now, if any one of you have got any question on PEPO or the government grant, feel free to approach SESAMi. We will explain the details for you, how you can get started on PEPO within 24 hours and how you can get and automatically get the government grant once you have registered with SESAMi.
Thanks, Chin. Yeah, I like the quick turnaround, the whole 48 hours to get everything done and registered.
No, 24 hours.
24 hours, even faster. Awesome. Okay,
Yeah.
great. So I guess thanks for sharing so much about PEPO and about how SESAMi is adding value to the supplier base and the supplier community. So maybe I guess now moving forward, shall we have Noel to just move forward to the panelist discussion so that we can just address some of the questions that we have on the Pigeonhole. For those in the audience, if you have any other questions, please feel free to just post any of them through the Pigeonhole by scanning the QR code or just clicking on the link.
Okay, thanks, Clement, and thanks for the speakers. So now we'll proceed on to the panel discussion where the questions will be just thrown out and then any of the panelists can just answer. Of course, any directed questions that we can answer accordingly. So one of the questions we have is what should suppliers be considering when undertaking receivable financing? So yeah, would somebody like to take that? King Long, would you like to take that?
Can you, now you can hear me, huh?
Yeah, you want to repeat the question?
No, I can hear. Okay, basically, all suppliers, if you are selling on credit terms and you have outstanding receivables, you are eligible for eligible financing. Typically, if you have a good spread of debt, meaning that you have many customers, we call it spread of debt, the bank will be very happy to finance you. Some of you may have concentration in a sense that you are selling to large customers. These are also debt which the bank are very happy to finance you. The key question that most of you are very concerned is whether should I have notification or should I have non-notification? In this particular program that is provided by DBS, you should be very happy because it is on a non-notified basis. However, for other program, it may be on a notified basis. And in this connection, you may have to check with your buyer whether your buyer is agreeable to the notification. Now, for some of you who are selling to the government and the invoicing is via the vendor at GV, you don't have a problem because this is a web portal which the government is agreeable to factoring, and the list of the factoring companies, including banks, are listed there that you can get the financing. So the advantages of notification over non-notification is that typically in a notified environment, you get higher financing and you get the bank to help you to provide with the collection service and the full range of the full range of sales ledger management. So that's quite good. So in summary, many of you would be able to get receivable financing if you have a good spread of debt or you are selling to large buyer.
Seems like there's there's this kind of considerations for our suppliers to actually consider. And I think, of course, if they want to know more information, they can feel free to contact, of course, any partners in SESAMi itself. Yeah, I think that would be good. So
Hi,
I
Noel.
think, yep.
Hi, Noel. I just wanted to add on what
Sure.
King Leong talked about vendors at Gov. I should have mentioned it earlier. Pebble is actually the next generation, the digital format to replace vendors at Gov. Now, don't ask me when it's going to be replaced, but I know that the new generation for invoice submission to government is Pebble.
That's good. We hope to see it coming soon.
Yeah.
Okay,
The adoption is quite fast also.
That's great. So maybe we move on to the next one. We have quite an upvoted question, which is, can I finance my non-SESAMi buyer receivables? So maybe this one is more related to Lynn, I guess. So Lynn, would you like to answer that?
Okay, yeah. So non-SESAMi invoices, unfortunately, can't be financed under the digital supplier finance arrangement. But definitely, we have another solution for you. So you can contact us directly, and we can structure something that for you as well. Yeah.
Okay, can. And then we have another question. I think this one, maybe we can open up the floor to any of the panelists. So let's read this question. Why is this digital finance solution or this digital supply finance is better than any factoring solution provided by any other FIs? Yeah, maybe anybody can take up these questions. You want to start first?
Maybe I can start first, and King Leong can give his comments as a veteran in the industry. Right. So from our perspective, right, typically, I think the benefit is that there's no financials and it's non-notified. So Kayla has already said, usually non-notified, the financing amount is lower, but this is up to 100% of our financing. And when you're transacting with us, we also do not require you to submit your invoice or your supporting documents. And I think these are just the top few key benefits of actually you taking up the digital supplier financing with us. Yeah.
Okay. Congratulate Lynn for coming up with this solution. This is one of the best solutions I found in the market. Okay. Number one, the key concern of everyone is notification. In this particular case, this financing is non-notified. So you don't have to worry about having to notify your customers. Number two, compared to many other schemes, it is 100% financing. Number three, as Lynn has mentioned, there is no need to submit your financial. So in many of the financing scheme, your main problem will be submitting your financial. Not that not that your financial is not so good, but there's a bit of hassle. So there's no need to submit the financial. And it's digital. you don't have to submit physical invoice. You don't have to do anything. I think basically it's downloaded from SESAMi. And it's a three-way match invoice, which means for the bank, it's a very safe form of financing. There is no fraud, because one of the major problems in receivable financing is fraud. And another very important feature is this: where in town can you get from fintech company the interest rate that's provided by DBS Bank? Your typical financing may be 1% or 2% per month, per annum, per month. So in terms of the interest rate is also very low. So I think this is one of the best, and unfortunately, is only available to those supplier in the SESAMi. So if I'm a supplier in SESAMi, I will take up this scheme quickly, and because of all the benefit that is available in this particular scheme.
Thank you, Keng Leong. So maybe for time constraint also, maybe we can also move on to another question. So I hope that addresses that particular question. And I think seems like there's really quite a lot of benefits to take up this program itself. And I think you can find out more when you speak to any of our partners. You can contact them as when you want to. And then we have one question that actually sent through the private chat through the WebEx, which is, do SMEs need to have good credit practice in order to use such financing? I think maybe Lynn, you can take this question.
Okay, so the question, may I repeat, is that whether the SME has to have good credit practice.
Yep, correct.
Right, so good credit practice can be subjective, but I would define good credit practice as if, let's say, we do a search on you, there will be no lawsuit against you for non-payment, you're not wound up by for bankruptcy. I think basically you need to pass the hygiene rules that typically a bank would set. Yeah, so that defines as good credit practice. So back to the question, do you need to have good credit practice to get financing, right, Noel?
Yeah, credit risk management practice. I think somebody corrected. I think credit risk management practice.
Sorry, then can I have a question again?
Do SMEs need to have good credit risk management practice in order to use such financing?
Good credit risk management practice.
Can I answer that?
Sure, Keng Leong.
Okay, Keng Leong.
Yeah.
This is the form of financing that you do not require good credit practice. Because in receivable financing, when you transmit the receivables to the bank is actually managing the receivable risk for you. When the receivable go into the bank, it will go into the bank aging. The bank will make sure that your receivables are paid in time. And in situation where, obviously, if it's on a notified basis, you will know that your buyer cannot play a fool with you. The bank will help you to manage it. So receivable financing management is a facility to take the bad receivable management services that you have, receivable management that you have from your company, and help you to manage it. So in fact, the company which do not have good receivable practice are the one who will turn to receivable financing, because the bank helps you to manage your receivable in the process of financing.
Okay.
Noel, I want to add a bit, right? So receivable practice needs another foundation, that is digital information. Why do I advocate digital information now? Say we live in a paper world. We used to live in a paper world not so long ago, and some of us still is in the paper world. You have a copy of the invoice. You photostat it, you scan it, it is a copy. In the digital world, in the SESAMi platform, there is no concept of digital copy of your invoice. Because when it's digital, it is stored in the database. And when it's stored in the database, when you open the screen to display it, it is that same invoice. It is not a copy of the invoice. It is just that on the screen you see it. So digital information, different from paper information. Paper information can be copied. Digital information is always the same piece of information as when it was created, right? So that's another advantage of how digitalization helps you to create an environment where the data is accurate and trusted. Okay, that's it.
Can. Okay, thank you. And we have a question from Nick on government guarantee financing. Does it mean that in the case of default, the company is only liable for 20% of total lending, given that government guarantees 80%? It's a bit specific. If you need me to repeat the question.
No, I saw the question, the Q&A pigeon, so
Yeah.
I take this question. When the government comes in to guarantee these loans, it is on as a last recourse. Mainly, the bank needs to actually show that we have tried to recover the monies from the customer, so we will try to recover the full amount. So which means that the customer, customer like yourself, the SME, is not only liable for the 10%. You're liable for the full amount, but the government comes in to guarantee up to 90% for the government schemes.
Okay, can. Okay, we have a few questions from hold on. Okay, wait, let me just answer some questions. Like for example, Daryl asked, can we have a copy of presentations? Like, yes, we will actually send the presentation copies to all the attendees here. And then we have a question from Rani. If we do not have any account with DBS Bank, still can we apply for this receivable financing?
Sure, no problem. We are looking to onboard new customers like yourself. So just approach the SESAMi representative. We have a link in our earlier presentation. Contact them and they will actually put you through in contact with us. Yeah.
Okay, great. Hope we answered that question, Rani. Okay, we have a very specific question. If we sell jet fuel to airlines using receivable financing and airlines have difficulty paying these fuel invoices due to their tight cash flow, so what is the consequence to this seller, or is there any penalty if they don't pay? It's a bit specific the question. So I repeat again, if we sell jet fuel to airlines using receivable financing and then this airline's got difficulty paying, so what is the consequence to the seller? Anybody want to take that question up?
I can try first. Okay. If you actually sell to airline and let's talk about without receivable financing in place first, because you actually receivable finance is actually the second part of it, right? Where you actually try to raise funds from your receivables. So but you sell to them, and if they don't repay, you have to go after them anyway. So when receivable finance come in is where we try the bank tries to give you your monies earlier ahead of the credit terms that you actually grant the airlines. But at the end of the day, the airlines will still have to repay. So at the end of the day, if you take out receivable financing, you are liable to pay if the airline don't pay you back. Yeah. But if the solution is credit protected, basically if we bundle it with credit insurance, and if the airline is insolvent, typically, then credit protection can come into play to protect you as a seller. King Leong,
Yep.
do you have anything to add on? Sorry.
That is okay. Basically, I think the question
Okay, no, I think we lost you.
is
Yeah,
which
maybe.
airline are you selling to?
Mm.
Can you hear me now?
Yep, can hear you.
There's a bit some. So the question now is which airline? Okay, which airline you are selling to? Okay, if you are selling to SIA, then there is no problem. I think there might be some delay in payment, but I think it's still good. So depend on which airline you are selling to. As Lynn has mentioned, it will depend on whether the arrangement that you have with the bank is on a recourse or non-recourse arrangement. If it's a recourse arrangement, then if any of the buyer, including the airline buyer, if they are unable to pay, then they will come back to you. On the other hand, you can take up a non-recourse arrangement because you may not be comfortable with the airline, but the banks may be comfortable with the airline, and the bank may be prepared to give you non-recourse arrangement. There is also the trade credit insurance scheme, which I've mentioned earlier. You can also talk to the credit insurance company to provide cover for the airlines. And I think
You know, I think your audio. The connection, I think, is a bit cut.
I think if you have this insurance cover, the bank will also be prepared to finance you.
Okay, can. Thank you very much for panelists. Okay, we'll move on to because I think we can take a few more questions. So we have a question from Casey. What are the costs apart from interest payable to the invoice amount or loan that will be incurred? Example, director's personal guarantee and compulsory loan default insurance. So maybe you can take a look at the questions at the pigeonhole. It's a bit long to digest, maybe.
The line is breaking, so we can't hear the question properly.
Okay, repeat the question. So what are the costs apart from interest payable to the invoice amount of loan that will be incurred? Like maybe you got any guarantee or any default insurance that you need to take up or what? Is there any other cost for the financing? Maybe this is for Lin.
Okay, let me read the question. What are the costs apart from interest payable to the that will be incurred? So specific to our partnership, there are no additional costs. Director's personal guarantee, and there's a small processing fee that we will be charging. I think it's about $100 just to prepare the guarantee document. That's all. So we are also not bundling this with loan default insurance. So specific to this partnership, there's no additional cost other than the funding cost, which I mentioned is a shade of 5% during this at the prevailing interest rate environment.
Okay, can. Okay, maybe we take two more questions. Let's try to answer. So should digitalization be a priority for businesses given the current economic situation? I think maybe you all may have mentioned something similar. So you just want to add on anything? You can feel free to do so.
Noel, let me do this. I'm
Sure.
Chin. Right. So digitalization must be a priority. Now, although I said must be a priority, what you need to decide is which part of digitalization you want to start with. I would recommend that you start with something very quick and very easy. Get on board the e-invoicing solution that SESAMi has to offer. It costs you nothing to use for 1 year. It costs you nothing to register. And with that, you are able to refer to your invoices any place, anytime, whether yourself or your buyer. They are able to see it, right? So that digitalization to me is, let's get on board. It is free, it costs you nothing, and it only takes 24 hours to activate. I hope
Okay,
that gives some perspective of
that's good.
digitalization.
Sure. I think we have another question for you. It's also a bit specific as to how much does it cost to actually register in Peppo? And yeah, how is SESAMi different from other providers of Peppo? Now you can take this.
I will take that. So how much does it cost to register in Peppo? There is no charge when SESAMi do it for you. In fact, as far as I know, most access point provider in Singapore provides no charge for registration. Most access point provider will charge you based on how many invoice you send or how many invoice you receive. Basically, we call that transaction cost. SESAMi is waiving this transaction cost for 1 year until end of June 2021. So with SESAMi, there's no cost. Now, how is SESAMi different from other access point provider? So think of access point provider as a telco that gives you the transmission capability. Think SESAMi goes beyond just giving you the transaction capability. SESAMi also provides you a portal, and that has a very specific term. It calls it a Peppo-ready solution. So to do Peppo, you need two portions. The first portion is connected to an AP, access point provider. SESAMi is one of the AP appointed by IMDA. Next, an AP needs to work with another Peppo-ready solution. If the AP itself does not have a Peppo-ready solution, SESAMi has both, right? And when you send your invoices to the government, SESAMi today also helps receive invoices that is being sent to the government. When you send your invoice to the government, customers who are using the SESAMi Peppo solution actually can ask SESAMi, did my invoice reach AGD in the Ministry of Finance? Answer is SESAMi can always check for you because we have a traceable transaction log. So we can trace for you when we receive the invoice, when the invoice was sent, when the invoice actually arrived on the AGD's PEPL server. So these are some of the key differences of SESAMi compared to other access point provider.
Okay, thank you, Chin. So I think we have come to 12 o'clock. Yeah, Clement, would you like to close it off?
Yep, thanks, Noel. So I guess with that, we've come to the end of our webinar session. Before I end off, I just wanted to give a shout out and thank you to all of our panelist speakers, Keng Leong, Chin, and Lin, for really taking the time to share with us all of the new tools that businesses can really use to recover post-pandemic. We also would like to thank all of you in the audience for taking the time to really join us, and we hope that you have a good takeaway from this session. So following this webinar, we have sent out a follow-up email to just share about what we have discussed during this session. If you have any other questions, please feel free to just reach out to us through our phone numbers or email. And yeah, I mean, we hope you have a good polling day tomorrow, and we look forward to seeing you at the next webinar session. Thanks, everyone.